Hello and welcome back to the Geordie Pig Investor channel, where we dive deep into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximize your passive income, this channel is your go-to resource for strategies, insights, and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you, one dividend at a time. In today's video, I'll be going through 3 of the most attractive looking US dividend paying stocks on the market right now that you should consider adding to your current portfolio. The first stock we are going to look at is none other than PepsiCo, stock ticker PEP. Pepsi is a prominent global food and beverage company recognized for its extensive portfolio of brands, including Pepsi, Lay's, Gatorade, Quaker, and Tropicana. As you can see on screen, their current price is $133.38. They are part of the consumer staple industry, have a market cap at $82.91 billion. They went public back in 1965, have a 53-year dividend growth streak, which makes them a dividend king. They actually have a 5-year dividend growth rate as well at 6.15%, and have one of their biggest ever yield to date, currently sitting at over 4%, which is unheard of for Pepsi, and that is thanks to that massive dip in price over the last 6 months, as you can see on screen, being down 21.47%. Pepsi owns household name brands, like I mentioned earlier, and they operate in more than 200 countries, providing a stable, diversified revenue base outside of just North America. Consumer staples like food and drink are relatively recession-proof. People still buy snacks and beverages even when the economy slows down. Even though Pepsi recently lowered its earnings forecast for 2025 due to tariffs and cost pressures, its long-term business model is considered stable. Pepsi is expanding its healthier product line with the acquisition of Poppy probiotic sodas. It's investing more in international markets where growth is faster than in the US, and they're also adapting to trends like sugar reduction and better-for-you snacks, which could also boost future sales. Their 12-month Wall Street estimate targets, you can see their forecasts on the screen right now, with the lowest forecast being around a 6% downside, but their average and highest case forecasts being a 23 and 38% upside. Their intrinsic value as well is currently valued at $164.45, meaning they are currently a 19% undervaluation on that current price. If you're looking for a high quality dividend paying stock with global reach and relatively defensive qualities, PepsiCo could be a smart long-term addition to your portfolio, especially after the recent price dip. It's not a get-rich-quick stock, but it offers steady growth, income, and lower volatility than high-flying tech names. Is this one that you currently have in your portfolio, or will you be looking to potentially add a position in this stock? The next stock we are going to look at in today's video for a buy for May 2025 is Rexford Industry Realty, stock ticker REXR. Rexford Industry is a real estate investment trust specializing in the acquisition, operation, and redevelopment of industrial properties throughout infill Southern California. With a portfolio comprising 424 properties totaling approximately 51 million square feet, the company focuses on high demand, supply constraint markets, aiming to create value through strategic investments and asset management. As you can see on screen, their current price is $33.08. They are obviously part of the real estate industry, have a market cap at $7.81 billion. They went public in 2013, have a 6-year dividend growth streak, have a 5-year dividend growth rate at a massive 14.87%, and also boast a very high dividend yield, currently sitting at 5.2%, which is not uncommon for REITs. Investing in Rexford Industry Realty could be appealing for several reasons, especially if you're seeking a combination of income and growth potential in the real estate sector. REXR specializes in industrial properties located in Southern California, a region known for high demand and limited supply, which can lead to favorable leasing conditions. Their value add strategy works very well for over the long term, as the company focuses on acquiring and redeveloping properties to enhance value, which improves cash flow and earnings over time. In 2024, REXR reported revenues of $936 million, a 17.37% increase from the previous year, and earnings of $262 million, up 15.57%. As well as this, the company's core funds from operations, FFO, for 2024 increased by 15% year over year, indicating strong operational performance coupled with the already very strong dividend and 5-year dividend growth rate we highlighted earlier. Their 12-month Wall Street estimates also look very promising, with the forecast on the lowest case scenario being a 7% upside, on the average case being a 28% upside, and on the highest forecast being a 49% upside. Our intrinsic value, when plugging in my numbers, also comes out with a 34% undervaluation, being valued at $50.31. I think that Rexford Industrial Realty presents a compelling opportunity for investors interested in a high-yield dividend stock with growth potential in the industrial real estate sector. Its strategic focus on the supply-constrained Southern California market, consistent dividend growth, and strong financial performance make it a noteworthy candidate for income-focused portfolios. The final stock we are going to look at in today's video is Watsco, stock ticker WSO. This is the largest distributor of heating, ventilation, air conditioning, and refrigeration equipment and related parts in the Americas. It's headquartered in Miami, Florida, and the company operates over 670 locations across the US, Canada, Mexico, and Puerto Rico, serving both residential and commercial markets. Their current price is $456.08. They are part of the industrials industry, have a market cap at $15.87 billion. They went public back in 1994, have a dividend growth streak currently sitting at 11 years, a 5-year dividend growth rate also very healthy at 11.06%, and a dividend yield that sits at 2.06%. We've seen a massive drop off in the share price over the last month, hence why I've decided to include it in today's video, with that share price dipping over 9%. And Watsco had steady earnings and revenue growth in 2024. Their revenues rose 4.6% to $7.62 billion, and net income increased 7.4% to $536 million, reflecting both organic growth and accelerative acquisition. Not only this, but they had record operating cash flow and expanded gross margins in 2024. Then in Q1 of 2025, they maintained strong core replacement market sales, offsetting transitional headwinds. Watsco is leading the industry shift to next generation low GWP refrigerants, opening incremental margin and share gain opportunities as adoption accelerates alongside investments in digital platforms and technical support services, driving higher attach rates and stickier customer relationships. Not to mention their already strong supplier relationships built over many years. On the 12-month Wall Street estimate, we can see that on the lowest forecast, they do actually have it a slight downside at 6%, but on the average and highest forecast, they see it as a 12% and 29% upside. Having said this though, their intrinsic value right now is slightly overvalued, with them only being worth $328.92, but with their dividend yield being on the lower side, that can play a role for this valuation. Watsco combines steady growing dividends, market dominance in a high barrier niche, and clear secular growth drivers, all underpinned by a strong balance sheet and free cash flow. I think for investors seeking a blend of income and a moderate capital appreciation in the industrial distribution space, Watsco offers an attractive, defensible business model with a track record of delivering shareholder value. Are you interested in adding any of the stocks I've shown you today in your portfolio, or do you have a different company in mind? Let me know in the comment section down below. That's it for today's video. Thanks for watching. If you're building a portfolio for passive income and financial freedom, don't forget to like, subscribe, and hit the bell notification so you never miss an update. Until next time, keep compounding and stay patient in the market, because your future self will thank you. For now, this is the Geordie Pig Investor, over and out.